These are 12 of the best European stocks right now for 2025. They've beat the market and combined are worth more than $2.7 trillion. We're covering all of them in this video from the smallest to the biggest moneymakers to save the best until the end. Starting with number 12, Schneider Electric. Schneider Electric trades in France under ticker symbol SU. Schneider Electric is a 145 billion euro market cap. Right now, it trades at its all-time high of 260 euros per share. The company is a leading global supplier of electric and industrial automation equipment. The stock has soared recently because they supply a lot of components for data centers. They earn a ton, but today their stock price is still double most of their numbers. A GF value for the company only comes in at 184 euros per share. That's down 40% from their current stock price. We're looking at Europe's top moneymakers. Most of these businesses have wide moats and bring in a huge amount of cash, meaning they may be interesting companies to look at. Plus, some themes on our list will stand out to you and may surprise you. Keep in mind, the video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense, do what's right for you. Now, let's keep looking at our list. Next at stock number 11, we have Deutsche Telekom. In Germany, they're listed under ticker symbol DTE. They're trading at their 52-week highs. Deutsche Telekom should be known in the US because it owns the controlling stake in T-Mobile, one of the US's 3 leading carriers. Despite recent strong performance, the stock is still down 70% from their all-time highs, hit back in the early 2000s at the end of the dot-com, telecom, and e-commerce bubble. Deutsche's numbers can look interesting because their T-Mobile stake is factored in as an investment. Today, though, it looks like the company's trading right at about its historical sales and in line with their projected cash flows. That's what really matters for a telecom business. Cracking the top 10 at number 10, we have Prosus. Prosus is an $89 billion Dutch company that's part of the Naspers group, down $2 from their 52-week high. Prosus is part of Naspers and it's a consumer internet group. They have a nearly 30% stake in the largest Chinese tech company, Tencent. They also have big stakes in Mail.ru, food delivery, and a variety of other interests. Their stock is probably most well known to investors because both Monish Pabrai and the Sequoia funds had decent-sized positions. They, however, have both sold out of their US-listed shares. Today, just FPA Crescent Fund, led by Stephen Romick, has a 2% holding. They trade at more than double tangible book. They're higher than their Graham number, and they're below their Peter Lynch value. A GF value for the company comes in at $9.55 per share, which is 24% higher than their current stock price. Next at number 9, we have Siemens. This is a German company trading in Germany under stock ticker SIE. It's a $157 billion market cap company, and it's trading at its 52-week high. Siemens is a multi-industry conglomerate that might be most similar to General Electric pre all of their spin-offs. Recently, though, Siemens, like other industrial conglomerates, has been spinning off select businesses in their portfolio. Today, their stock's priced slightly ahead of projected free cash flows and well above their historical sales and earnings values. The company's GF value comes in at 40 euros per share below their current stock price, or down 27%. Then stock number 8 is Inditex. They trade over the counter in the US under ticker symbol IDEXY. Inditex is one of the world's largest textile companies. It owns well-known brands including Zara, Massimo Dutti, Bershka, and Pull&B. The Spanish company today has a $158 billion market cap, and it trades in the middle of its 52-week range. Down just 15% from their all-time high, they're currently trading above most of their values. The company's more than double their projected cash flows or their Graham or Peter Lynch values, and they're ahead of their historical sales. That contributes to a modest overvaluation where they're up $5, but 22% higher than their GF value. Now we're going to keep getting into bigger and bigger household names. At number 7, we have L'Oreal. The French company has an ADR that trades in the US under ticker symbol LRLCF. It has a $188 billion market cap, and it trades just $10 above their 52-week low. There's a super investor in this stock, and that's Thomas Russo, with just a very small percentage of his portfolio in the company. L'Oreal is the largest beauty company in the world. It owns leading brands in product categories such as skincare, makeup, hair care, and fragrance. Geographically, their sales are pretty well diversified. Some beauty and health stocks have really been hit hard recently. Despite a decline in their stock price, today L'Oreal trades at about its historical sales valuations. These, however, are way above their earnings or their cash flows at this time. Yet despite that, and in part because of their strong brands and distribution, a GF value for the company comes in at $533 per share. That's up 34% from their current stock price. Stock number 6 is mostly a US company, but it's actually headquartered in Ireland. This is Accenture, trading in the US under stock ticker ACN. The $220 billion consulting firm is down $30 from their 52-week high. 7 super investors own Accenture stock, and this is led by Jensen Investment Management with a 7% holding. Accenture is one of the world's largest services and consulting firms, and it's also one of the largest employers, employing more than 500,000 people. The company was previously the consulting arm of auditor Arthur Andersen, which went bust during the Enron scandal. As a standalone business, the stock has performed very well. Their stock price is up more than 30 times in just 23 years. Today, Accenture looks like it's trading beyond most of their historical valuations. They're priced above their sales, earnings, and their cash flows by a decent amount. That's even with growth being priced in. Despite some of these valuations, a GF value seems to be in line with their current stock price, meaning Accenture may be around fairly valued. Now, getting into the top 5 money-making European companies, at number 5 we have Hermes. Hermes is the 180-year-old family-controlled luxury goods giant, best known for its Birkin and Kelly bags. Today, Hermes is a $269 billion company. Its ADR, trading in the United States under ticker symbol HESAY, is down $7 from their 52-week high. Their stock has been a very strong performer in the last decade, increasing more than 7 times in the past 10 years. Much of that is on their brand power, as their fundamentals don't seem to reflect these high valuations. Today, Hermes is strongly above their cash flows, earnings, and their sales by a large amount. That comes in line as they're trading at a PE of 59 times. Yet, the market still thinks this is one of the strongest companies out there, and they have a GF value of $261 per share, roughly in line with their current stock price. Stock number 4 is another well-known company that's outperformed recently. This is SAP. Trading under its ticker namesake in the United States, the German enterprise resource planning company is a $302 billion market cap. Today, it trades at its 52-week and all-time highs. 3 super investors own SAP stock today. This is led by Sequoia Fund with 4.6% of their portfolio in the company. They bought in the middle of 2022, and since then, SAP stock price has nearly tripled. Again, there's a lot of positivity being priced in here. SAP is a very mature, established company, and they're more than double their historical sales, way above their earnings or their cash flow potential, even with growth being factored in. Those are super lofty compared to most historical and conventional valuations. That's why a GF value only comes in at $150 per share, down 75% from their current stock price. European stock number 3 is one of the most important semiconductor companies in the world. This is ASML. The Dutch company is a $293 billion market cap that trades $100 above their 52-week low. ASML is the world's leader in photolithography systems that are used in the manufacturing of semiconductors. Their school bus-sized multi-million-dollar machines are integral for their clients like TSMC, Samsung, and Intel. Right now, 5 super investors own their stock, led by Stephen Mandel with a 3.5% position. ASML trades above their historical sales, and they're way above their projected cash flows or their Peter Lynch value. The company's just about in line with a DCF based on their earnings. Yet ASML is really without rival. Despite supplying to a cyclical semiconductor end market, the company's GF value comes in at $872 per share. That's up 13% from today's levels. Stock number 2 is the most well-known company in Europe. This is LVMH, Moet Hennessy Louis Vuitton. The luxury goods giant is worth $355 billion, and it trades just $100 above their 52-week low. No super investors are in the stock right now, but it was last owned by Thomas Russo, who sold out in the middle of 2024. Of the companies we've looked at so far, LVMH may be priced most attractively. They trade just slightly above their Peter Lynch value and in line with historical sales. While they do trade above their projected cash flows, they are below their DCF, both on a free cash flow and earnings basis. There's an enduring, priceless nature to most of the luxury goods that they sell. That's part of why a GF value comes in at $950 per share for the company, which is up 25% from their current stock price. Now, the biggest moneymaker in Europe and the top stock on our list has taken the world by storm in the last couple of years. This is the Danish pharmaceutical company Novo Nordisk. They trade in the US under ticker symbol NVO. They're a $350 billion market cap that trades at their 52-week lows. With a meteoric rise from the beginning of the pandemic, the company peaked in 2024, and now they're down 46% below their all-time highs. Despite this, they're a long-term compounder, being perhaps Europe's top stock since the turn of the century. Novo Nordisk and peer Eli Lilly have really popularized GLP-1 therapies to treat diabetes and be effective for weight loss. However, the company's stock plunged and their competitor leapt ahead after they posted disappointing trial results. On top of that, their blockbuster drugs, Ozempic and Wegovy, are included in the next round of Medicare price negotiations. Today, Novo Nordisk trades slightly ahead of their historical sales and they're in line with their earnings. However, they do trade well above their cash flows. Still, this was one of the most hyped stocks in the market in the past handful of years. Today, their GF value is around $120 per share, which is up 36% from their stock price, though this does come with a possible value trap warning. If you enjoyed the video and you want to support the channel, click the first link in the description. This will take you to Global Value's affiliate, Interactive Brokers. Thanks for watching and have a great day.